So we're still reviewing the markets. Let's talk to Wale Olusi, who's an investment analyst with AfriInvest. Good morning to you, Wale.
Morning, Harry.
Well, the market opened the week bearish. Taking a look at the numbers as I've been reading out in the last couple of minutes, does it have anything to do with the recently released inflation data? What is actually driving the market at the moment?
I think the question is what is dragging the market rather than driving, because the last 2 weeks, the market has been broadly bearish, and even before the inflation number came out, investors have not really seen any major news, in the horizon to stoke their sentiment. Of course, we think the major driver that we think might drive investor sentiment going forward should be the Q2 2016 earnings numbers. And I mean, some of them have already started coming in. Last week, we saw Nigerian Breweries post 18.5% or thereabout revenue growth, but PAT declined. And a few banks have already notified the exchange that they will be submitting their numbers a little late due to board approval. But if you look overall, many of these companies, from the consumer goods to the banking sector, industrial goods, the results are not expected to be really, really exciting like that. The banks have the issue of rising NPLs. They are not growing their loans as much. A lot of investors are pricing in the impact of devaluation on their numbers and NPLs. So all of this comes to the fact that numbers are not what's it called? Dividend payments might not come in as much as expected. So even if you want to do dividend investment, you probably will not get as much. So sentiment is generally bad, and except a major change will come in, probably coming from the policy that will suggest the fact that things can get better. I think in the short run, investors don't see any major trigger to keep them buying. So the real people that are buying while a lot of people are selling are those that we think will want to take a very long position. Otherwise, what you will see will be short-term speculative trading that will trigger some bargain hunting, and after a while, you will see people take profit. So yeah, the news about inflation touching 16.5%, I don't think it's a major concern for investors, because if you look at what the MBS reports, some of these issues are what we know, and they are transitory. They are not issues that are here for long, basically because of the reforms in oil prices and the devaluation in the FX market that we saw. So yeah, it was expected, though some of us didn't expect it to be that high, but we know that inflation should remain under pressure. So we don't think investors are as worried about the inflation number as regard the outlook for the earnings number for many of these listed companies. So we think that is what is keeping the market bearish so far.
Okay, so because I was just going to ask you, at a time when the markets are still trying to adjust to all the economical headwinds which you mentioned, can inflation be addressed by investing in stocks, for instance? Because, before now, most analysts would always advise that it is when the risk is highest that you should remain in the market.
Yeah, definitely. When the risk is higher, the prices are extremely cheap. I mean, so the question is, which stock should I pick that will give me the maximum return within a reasonable time horizon? I think that's one thing we should sound to investors. If you want to do short-term investing, then you really need to keep your eye on the market to know when to come in and go out. Otherwise, the best thing to do is to look long enough, buy when it is low, and stay long enough when the economy is stable. Then you can come out when the prices are higher. But with a lot of headwind in the system, if you want to invest above inflation, inflation that we have now is actually transitory. I think it will correct itself in a couple of months from now, once the policies are right and things are stable. So yeah, I don't think there's a lot about using equity to invest above inflation. I think you can still make money in equities even within the current inflation environment, because a lot of prop traders will still have to make money whether inflation is high or not, because ultimately what determines their return is the in and out they make over a period of 1 year. And for many of them that do very active trading, they can still make a lot of money even within the year. It's a question of the prices they target and how they are able to come into the market and when they go out.
But
So
then,
yeah, you can make money scientifically.
sorry, Wale, to cut you. You know, prices on treasury bills and bonds outside of stocks tend to be priced quite low at times like this. So will it also be wise to invest in that segment of the market now?
Well, it would be wise to, yeah, well, generally when the risk in the equities market is extremely high, you probably want to put your money in a low risk environment such as the T-bills and bonds, government bond instruments, yeah. But investors will continue to price in the risk premium coming from inflation, coming from any other uncertainty that is in the horizon, even in T-bills and bond instruments, to be able to get the right price for them. So yeah, this is. I mean, if you have enough funding, you can actually do investment in T-bills at the moment. But of course, that's bearing in mind that investors will definitely price in the premium coming from higher inflation.
Thank you so much, Wale, for your perspectives this morning. Do have a profitable day.
Thank you.